Hi everyone, I hope you all safe and healthy with your family and friends. This video we are going to learn about 11th Standard Accountancy, Chapter 10, Depreciation Accounting, Illustration Sum number 10. Miss Ram and Co. Textile Mills purchased machinery on 1st April 2014 for rupees 2 lakhs on credit from Miss Neela and Co. and spent 10,000 rupees on its installation. Depreciation is provided at 10% per annum on the written down value method. Prepare machinery account and depreciation account for the first 3 years. Books are closed on 31st March every year. So what we have to note here, listen, when did they purchased asset? That is 1st April 2014. Then on what method they purchased asset? On credit method, credit basis. Okay, so Miss Ramonko Textile Mills purchased machinery from Neela and Co. Miss Neela and Co. on credit basis. So what's the journal entry? Machinery account data to Neela account. So machinery account is on debit side. You have to enter the opposite account. You go to debit side, you have to enter the opposite account here. The same purchase date you have to enter here, that is 2014 April 1. Okay, amount rupees 2 lakhs rupees entered into the amount column. After purchased asset, Miss Ram and Co. Textile Mills spent 10,000 rupees for its installation. What's the journal entry for the installation of machinery? Machinery account data to bank account, right? So machinery account is on debit side, so you go to debit side, you have to enter the opposite account here, that is bank account. To bank account, 10,000 rupees entered on the same date. Okay, so at the end of the every year you have to provide the depreciation of the asset. So 2015 March 31st, when did they close the account? 31st March every year. Okay, so you have to provide the depreciation at the end of the year, 31st March 2015. What's the journal entry for the depreciation account? Depreciation account data to machinery account. Machinery account data to depreciation. The journal entry for the depreciation account is depreciation account data to machinery account. Okay, so machinery account is on credit side, so you go to credit side, you have to enter the opposite account here, that is depreciation account. By depreciation account entered here 21,000. How do you get 21,000? You have to find the original cost. So for that you have to add these two values, 2 lakhs plus 10,000. You will get 2 lakhs 10,000. So from that you have to find the 10% depreciation from that. So for that, for this zero is cancelled. Remaining you have 21,000. This is the first year depreciation value. Then when you have to find which side has the higher value, debit side has the higher value, 2,10,000. So you have to enter that higher value as the total on both sides, 2,10,000, 2,10,000 entered. Then you have to find out the difference between these two amounts. So for that you have to subtract 21,000 from the total amount, 2,10,000. You will get 1,89,000. Against this you have to write balance carried on by balance carried on the same day, March 31st. Okay, so this is the closing balance of the machinery account. Then you have to brought this 1,89,000 to the opposite side and enter below the total. We entered it 1,89,000. Against this you have to write to balance brought on. This is the opening balance of the machinery account is 1,89,000. And in date column you have to enter the next day from the March 31, 2015, that is April 1, 2015. Okay, we entered. So first year is completed. Now we are going to find the second year depreciation. So whenever you provide the depreciation, you have to find at the end of the accounting period. So for that you have to take 2016 March 31st by depreciation account 18,900. How do you get? Listen, you have to find the depreciation value for first 3 years with the use of written down value method. So for that, after subtracting the depreciation value, you will get 1,89,000. From the 1,89,000, you have to find the depreciation for the next second year depreciation value. Okay, so 1,89,000 into 10% means 0 cancel, you will get 18,900. This is the second year depreciation value. Then you have to find which side has the higher value, 1,89,000 or 18,900. Debit side has the higher value, 1,89,000. So you have to enter that 1,89,000 on both sides. This is the total value. Okay, we entered. Then you have to find the difference between 18,900 from 1,89,000. So you have to subtract 18,900 from 1,89,000. You will get 1,70,100. So again this you have to write by balance carried on the same day, 31st March. Okay, so this is the closing balance of the machinery account. Amount is 1,70,100. Then you have to brought that 1,70,100 brought down to the opposite side and enter that 1,70,100 below the total. We entered against this amount. You have to write to balance brought down. This is the opening balance of the machinery account, rupees 1,70,100. On date column, you have to enter the next day from the March 31st, 2016. The next day from the March 31st is April 1, 2016. This is the next accounting period for the machinery account. Next accounting period opening balance of the machinery account is 1,70,100. Second year depreciation completed. Then we are going to find the third year depreciation. So whenever you provided the depreciation, you have to calculate at the end of the year, that is 31st March 2017. 31st March every year, that is the closing balance, closed accounting period. So you have to calculate that amount, that date, to find the depreciation account. So that is 17,010 rupees. How do you get this value? Listen, one, you find that depreciation for 3 years with written down value method. So after subtracting depreciation, you have the closing balance. That means here opening balance of the amount is 1,70,100. So from that amount only you can find the depreciation value. This is the, you have to, because you prepared the written down value method, you prepared the depreciation with the written down value method. Okay, so for this 0 cancel, remaining you have 17,010 rupees. This is the third year depreciation. Okay, so let's find which side has higher value, 1,70,100 or 17,010 rupees. 1,70,100 has this side, debit side has the higher value. So you have to enter that amount on both sides as the total. Then you have to find the difference between these two amounts. So for that you have to subtract 70,010 rupees from 1,70,100. You will get 1,53,090. So this is the closing balance of the machinery account. So against this value 1,53,090, you have to write by balance carried out on the same day. So this is the closing balance of the machinery account. So then you have to brought that value 1,53,090, this amount brought down to the next opposite side and enter that amount to the below the total. Okay. The accounting period are dated on the next day from the March 31, that is April 1 on same year. Okay. So this is the next accounting period for the opening balance of the machinery account is 1,53,090. So we find first 3 years machinery account here. We prepared ledger account on machinery account for the first 3 years. Okay. Now we are going to post the depreciation account for the first 3 years. Okay. So what's the journal entry for the depreciation account? Depreciation account data to machinery account. What's the first year depreciation value? 21,000 dated on 31st March 2015. So the same date you have to enter here, 31st March 2015 to machinery account 21,000. So you have to transfer this depreciation into the profit and loss account on the same period. 2015 March 31, the same period you have to transfer the machinery account depreciation account into the profit and loss account. So you have to enter the same value here, then you have to total it because you have the same amount. So the total also we will get the same value. Okay, 21,000 as the total. So first year depreciation completed. Then the second year depreciation is, the journal entry is depreciation account data to machinery account dated on 31st March 2016. Okay, the depreciation value is 18,900. So you have to enter here that value. Okay, and what's the journal entry for the transferring depreciation account? That is profit and loss account data to depreciation account. Where is depreciation account? It is on credit side. So you go to credit side and you have to enter the opposite account here. That means by profit and loss account 18,900 rupees. You have to enter here the same year 2016 March 31. Okay. So second year depreciation value posted, account posted. Then come for third year depreciation account. Dated on, listen here. What's the date on third year depreciation? 31st March 2017. Amount is 17,010 rupees. Okay. So you have to enter 2017 March 31st to machinery account. Why you have write to machinery account? What's the journal entry for the depreciation account? Depreciation account data to machinery account. Right. So depreciation is on debit side. You go to debit side, you have to enter the opposite account here, that means machinery account. So you have to enter to machinery account. How much will be? 17,010 rupees. This is the third year depreciation value we entered here, and we provide depreciation. We transfer the depreciation account into the profit and loss account. Okay. So for that you have to enter the same date 2017 March 31st year. By profit and loss account 17,010 rupees, the same amount you have to enter here. You just transfer the depreciation into the profit and loss account. Okay. So where is the depreciation account? Profit and loss account data to depreciation account. Depreciation account is on credit side. So or you go to credit side. What's the opposite journal entry? Profit and loss account. Okay. So you have to enter here the opposite account. Amount is 17,100 rupees. Listen here, we have the same amount on both sides. So you have to enter the total 17,010 rupees, 17,010 rupees. So the total is also is to be equal. So we find the first 3 years depreciation in the ledger account and first 3 years machinery account in the ledger account. Do you have any doubt? Please comment it on the comment box. Thank you. Take care.